Welcome back. As promised, let's invite the management of EPL. This is a tube packaging company that provides packaging for oral care, beauty, cosmetics, pharma, health and food, and nutrition and home care. Now, they reported a good set of Q4 numbers. The revenue growth was up close to about 6%. Margins have expanded, though the profit has declined due to an exceptional item and a one-off tax refund. To talk about the way forward, we have with us the MD and Global CEO, Anand Kripalu. Anand, morning, and thank you very much for joining in. This is Reema here. First, if you could just break up your Q4 top-line growth of 6.2% in terms of volumes and even in terms of realizations. And secondly, for FY25, how is demand? What can you guide? Do you think you will be able to hit a double-digit revenue run rate?
Well, Reema, thank you for having me, and very good morning to all your viewers. Well, the thing is, we don't share volume numbers in this business because it is not a reflection of our strategy. In this business, you have huge differences in the cost per tube, depending on the dia of the tube, small dia tubes versus large dia tubes. Big differences depending on the categories, so beauty and cosmetics versus oral, and very different revenue per tube when you look at it in different regions of the world. What I can tell you, though, is that the 6.2% revenue growth that we've declared has some negative pricing in it because of the softening commodities compared to the base. And therefore, if I were to give you an indication, it is that the revenue growth is less than a simple aggregation of the volumes of our tubes, even though I must hasten to add that it isn't the right measure of our strategy and our performance at all. Now, as far as the outlook is concerned, I'm actually very confident about the business, both in terms of demand, therefore revenue, and our ability to continue to improve margins. Now, we have given an outlook of double-digit growth with 20% margin in the foreseeable future. Right? So I'm not going to comment right now whether it's going to happen next quarter or later in this fiscal. But what I can tell you is that we're seeing good demand, right, from all sectors, and actually in most geographies, we're seeing good demand. In Q4, our demand was actually better than the previous 3 quarters of last year. So actually, we're entering fiscal 25 with momentum. So both on revenue and our ability to continue to grow EBITDA, because we have delivered 6 quarters of sequential, solid double-digit EBITDA growth, right? And I'm confident that we will continue to grow EBITDA, right, and continue to grow margins. So that's our perspective.
Mr. Kripalu, good morning. Great to have you on the show, sir. So you mentioned that the 6% revenue growth, that involves an element of a price decrease as well, right? So this was a fourth quarter phenomena, I guess. What is the trend that you're seeing now in Q1, and what's the general outlook on pricing?
So as you are aware, our input commodities actually went completely haywire for almost 2 years, okay, post-COVID. That, coupled with disruption in global supply chains, put huge cost pressure on our business. In our business, the price increases tends to lag the cost increases, and therefore we saw a hit on margins in previous years. What's happened since then is that commodities have softened and started tempering, though I have to say there is a slight uptick on commodities in the most recent months. So what we're doing now is we are lapping lower cost commodities and therefore lower pricing from customers, because many of our customers are contracted and there's a pass-through with a delay of about 3 to 4 months, a pass-through. So when the commodities go up, the prices go up, and when they go down, the prices go down. And therefore we're comparing it with quarters in the past where the input costs and therefore the price per tube was higher. Having said all of this, as you can see, it has not impacted our margins. We have continued to recover margins and improve margins. And I think that just reflects the resilience of our business model and the relationship we have with our customers.
Okay, fair enough. You're also focusing on the sustainability proposition with recyclable tubes. And the contribution of that has been steadily going up. It was about 10% in FY23. It rose to 21% in FY24. And I remember somewhere you had said that it's going to grow 3x. So talk to us about this recyclable tubes. Are we likely to hit a 60% revenue contribution? If yes, by when? And how are the margins on this?
Yeah, so I think first and foremost, I want to say that our stated ambition is to be the most sustainable packaging company in the world. Okay. And therefore, a lot of what we do in our company puts sustainability and the heart and soul of our operation. So it isn't just a line which looks good. It actually works deep down into the depths of our company. Now, customers, many of them, who are the FMCG companies, which you would know globally, have made declarations about their conversion to sustainable tubes. We, from our part, have done two things. One is we are more ready than anyone else to start supplying sustainable tubes because it does require back-end modifications in the business, right? And in our factories. So we are more ready than anyone else. And second, to your point on pricing, we actually think that trying to charge a higher price or higher margin may be good for the short term, but not good for the long term of driving a sustainable world and growing market share with big customers who are critical to our long-term success. So we actually don't put any barriers and hurdles when customers want to convert. For us, our quest is to grow our volumes faster and to grow our wallet share with those customers faster. And finally, to your point, yes, we doubled the contribution of sustainable tubes from 10% to actually 21% last fiscal. And we're exiting even stronger than that. 3x is a number that we will ultimately achieve, but that's a marriage of both the customers and when they want to shift, right? And our ability to supply. On our part, we are absolutely ready. And as I said, one step ahead of customers demanding conversion. And we are beginning to see shifts in wallet share because we are more ready than other players. So customers are coming to us and saying, hey, can you supply? Because we want to convert. And
you
we're
said
saying,
the
yes,
exit...
of course, we're ready.
Okay. You said the exit contribution of sustainable tubes is much higher than 21%. What's the number? And at least for the near term, do you think this 21% could hit 30% revenue contribution by FY25?
I think it will definitely hit 30% or more. Okay, so we exited a little above the average of 21 for last year. And I think the average of FY25, we believe will be 30% or even a tad higher.
Okay. All right, sir. We will leave it on that note for today. Thank you very much for joining in, and I wish you good luck with the year and all the plans ahead. That is EPL